Hello, ladies and gentlemen. My name is Greg Michalowski, and this is the currency report for Equities.com. Today's date is July 2nd, 2014. Let's take a look at the major news stories impacting the Forex market and trading here today. In Australia overnight, the trade balance showed a deficit of minus 1.91 billion versus expectations of minus 0.2 billion. This is bearish for the Aussie dollar. Yesterday, the Aussie versus US dollar traded at the highest level since November 2013. Today, it's under pressure, corrective pressure to the downside. In the UK, nationwide home prices rose by 1% in the last month, up 11.8% year on year. This was higher than the estimate of 0.5% and keeps the bullish bias intact for the pound sterling, although it is off its high levels of the day. Also in the UK, construction PMI rose to 62.6 from 60.0 last month. This is the second highest level for the year. The estimate was for a decline to 59.7 in the current month. Better data, again, bullish for the pound sterling on a relative basis. Finally, in the U.S., we had the ADP employment report, which showed a strong gain of 281,000. This is the highest level since November of 2012. The U.S. ADP report is a proxy for the Labor Department's private sector payrolls, which will be released tomorrow at 8:30 a.m. So the expectations by the market is that report tomorrow might be stronger than expected. Let's take a look at the currency chart of the day. I'm looking at the euro versus US dollar. This is the daily chart for this currency pair. Over the last 2 days prior to today, the price moved above the 200-day moving average. That's the green line in this chart. That is bullish for the pair, but today, as you can see, we're seeing weakness and a move back below that 200-day moving average. What does it look on the hourly chart, a shorter-term hourly chart? When the market started to fall below that 200-day moving average, had a little correction that came up to that 200-day moving average at around the 136.72 level. Market sellers entered against that 200-day moving average because risk could be defined and risk could be limited, and we saw a move through. Now, what is resistance against the 100-hour moving average? That's a blue line in this chart that comes in at the 136.52.7 level. Also near that 52.7 level is the 38.2% retracement of the move up from last week's low to this week's high. That level comes in at 136.52. So traders should expect that there should be resistance against the 136.52 level now that we're below the 200-day moving average. We're below the 100-hour moving average, 38.2% retracement. On the downside, the target for trading here today comes in at the 136.29 level. That is the 200-hour moving average, the green line in this chart. So there you have it, a look at the fundamentals moving the foreign exchange market and also the chart of the day. If you like this video and want to see more, click subscribe on our YouTube channel. Also, for more information on trading Forex, visit me daily at GregMikeFX.com. Thank you very much and good fortune with your trading.